Okay, so we are going to start our chart breakdown. We are going to start with gold, XAUUSD. You all know that's the highest pair I trade. So we are going to start with XAUUSD, right? Gold has been on an all-time high. Those who are in the Telegram, remember I told you guys, I think like last week, that we are going to see gold hit its all-time high to 3,000. So gold has been on an uptrend, continuously on an uptrend. The reason why I don't like using trading views because you come there, you're going to see all my old analysis. And I always like to start the analysis on a fresh new page where we don't have any analysis on. So what I'll simply do is that I'm going to use MetaTrader 5 so that we can basically put in a new pair, start a fresh new analysis. Which does this MetaTrader 4? Okay, this is MetaTrader 4, so we can go with MetaTrader 4. Okay, so MetaTrader 4, we are going to be using MetaTrader 4 to do our analysis, and I'll be starting with gold, analyzing gold, right? I really want to get an entry on gold today. So the first thing I always do is we always do our top-down analysis, right? Top-down analysis, and when I'm on the higher time frame, what am I looking at? On the higher time frame, I want to look, first of all, look at the daily candle, right? I want to look at the daily candle, so going to the higher time frame, on the daily time frame, I want to look at the daily candle. What do I see on the daily candle? Is the daily candle a bearish candle or a bullish candle, right? If the candle is a bearish candle, then I'll have this ideology in mind that, okay, I should be looking for bullish entries. If the candle is a bearish candle, then I have the ideology that the market for today is bearish. So I should be looking for sell entries, right? That's probably trading with the trend. And aside from that, you look at the overall trend on the higher time frame, you look at the daily time frame, you're going to see that the market has been on an uptrend. That is why for the past 6 months, that is since last year, right? Gold, there has not been any better opportunity than buying gold or than looking for buy opportunities on gold because it has been on an uptrend, right? Gold has been on an uptrend. So on the daily time frame now, first of all, I want to highlight the fact that I have a bullish daily candle, right? And I want to highlight the fact that gold is on an uptrend. So aside from that now, what I have to do now is to do my top-down analysis where I'll simply mark my key levels from the daily time frame down to the lower time frame. Between the 1 hour and the 15-minute, I will look for my entries when I'm getting close to my present market price, right? So for now, we have to simply mark out our key levels on the higher time frame. Going down to the lower time frame to look out for an entry, we should have it in mind that our candle for today is bullish and the market is on an uptrend. So while going down, we are looking more of buy opportunities. Where are the possibilities for the market to buy, right? So with that being said now, I want to do my top-down analysis starting from the daily time frame. So I'll simply have to minimize my chart. Right? Two things. We use support and resistance marking our key levels and trend line, right? We use support and resistance marking our key levels and our trend lines to actually analyze down to the lower time frame. So we are going to start with marking key levels. You might be asking yourself why I am marking this key level down here. If you go to my trading view, you see that on my trading view, let me just take you back to my trading view. You see that on my trading view, the reason why I don't want to use trading view is because I already have analysis on trading view. If I go to trading view now, if I go to a daily time frame, you see that I have this analysis marked on the daily time frame. Some of these analysis you see here are analysis I did last year on this chart, right? The market might go up and finally come back down. Technical analysis, pure price action is simply looking at what price has done in the past to predict what price will do in the future, right? So you are marking these key levels even when it is far away from price. You are marking it not because you want to get an entry down there now. No. You are marking it so that as the market is going up, if the market comes back down, you are going to be aware of the fact that the market had once respected this level in the past. So if the market is approaching this level, it is likely going to respect that level again in the future. Now, it draws your attention. That is your point of interest, right? So that's the reason why we do our top-down analysis. Does not necessarily mean that those levels you're going to mark on the daily time frame right down there or right up there, the market is going to come to it anytime soon. But one never knows, right? The market, something can happen. The market move 500 pips today, 500 pips tomorrow, and you want to see it's already on that level you mark down there. Now you are aware of the fact that that was a key level in the past, and we actually have to pay attention to that particular level. So let's go back to our trading MetaTrader, and we do our top-down analysis. So I am marking this key level down here. Key levels, key point of interest, levels where the market respects 2 or more times, right? Key point of interest. So we are basically highlighting this point of interest. I think by now, except you are completely new, you should be able to highlight or mark your key levels. So key levels are the most obvious levels that the market is respecting. Some of you try to complicate your key levels, but it's the most obvious levels. Keeping it very simple, the levels that you see that the market respects, the only difference might be that maybe of a familiarity. I can easily mark out these key levels within the next 1 minute. But for you, you need to take your time and mark the key levels. And why not take your time, right? You can take your time, even come, you take your cross-head if you're using your laptop. You actually look at the key level. You say, okay, from this level, the market has respected this level again. It has respected to the upside. And remember, it must not respect only on one side. It can respect to the downside and respect to the upside. As long as it respect on the downside and goes to the upside and respect on the upside, it is a key level, right? It means that key level is still valid. So this is a key level right here. You use the cross-head again, making sure that you take your time to actually figure out these levels. This is a key level right here. The market respected this level, went down, came up, respected the level, went down, came up, respected this level, rejected down, break to the upside, respected this level from the upside, 1, 2, right? And it pushed up. So that's a key level right there. Now, while marking on the daily time frame, you might not see some of these key levels. Remember, we're on the daily time frame. One candle on this daily time frame is 24 hours. Which therefore means that on this one candle you see here, there are 24 1-hour candles within, which therefore means that there will be key levels within. That's why we are going to start from the daily and we are going down. Now you might be asking why I'm not starting from the weekly time frame or the monthly time frame. I am a day trader, right? So I'll mostly want to observe what is happening on the daily candle. Then I go down to look for my entries on the lower time frame. So simply mark the key levels, the ones you can see, the most obvious key levels. Once you are done looking at the most obvious key levels, you go down to the 4 hours. There are levels on the 4 hours that you are not going to see on the daily candle. That's why we are going down to the 4 hours. So we go down to the 4 hours now. You are looking at levels that you could not see on the daily time frame, right? Like this level right here. This is a clear key level right here. We could not see it on the daily time frame you mark. This is another key level down here, right? We mark this key level down here. You see that? Our trend line is still here. If there's a possibility of joining another trend line, you can do that. Those who are new to trend line, you can go and check the course on trend line, maybe on YouTube, maybe on Telegram. I mean, I've made it available everywhere. Even the trend line trading course is available on Telegram or something. So the knowledge is there. It is you that don't want to consume. So I still have this trend line here, maintain this trend line here. Looking at to see if I can get more key levels on the 4 hours. I have a key level right here. So on this 4 hours, you see that the market respects here. The market respects here, right? It respects here. It respects here. It respects here. Then on the upside, right? It respects to the upside. So we simply mark those key levels. Now, we might not see another key level. We might see another key level that is not really clear on the 4 hours. When we get to the 1 hour time frame, it's going to be clearer, right? As we get to the 1 hour time frame, we are going to see other key levels that we did not see on the 4 hours, right? We are going to see other key levels that we did not see on the 4 hours. So right now, right, I want to look at key levels that I did not see on the 4 hours. So we are on the 1 hour now. I see a key level down here, right? If you follow these key levels I'm actually looking at, you're going to see where the market is actually respecting all true. You're going to see where the market is actually respecting all true. So looking at this 1 hour key level, this 1 hour time frame, now when I get to the 1 hour, now I want to start paying attention towards the present market price, right? This is present market price up here. Because as I'm going down, I want to start looking for an entry. And remember, your entry is only going to be on the present market price for direct market execution or a pending order, which is going to be still around the present market price. You don't want to come and put a pending order right down here because you don't know how long it's going to take for the market to leave from up here to come down here. So your entry is only going to be on the direct market execution, that's on direct price, or around market price for a pending order. Now, if you're hearing about pending order again for the first time, probably you are lacking something. You need to go through the lessons. On YouTube, there's a video, there's a lesson on order types, right? On my YouTube channel, you can go and you watch that right there. So, on the 1 hour time frame now, I want to zoom in this chart. I want to pay attention to what is happening around this present market price. So this present market price we are talking about, right? I want to pay attention to what is happening here. Now, looking at the market here, I'll adjust this trend line like this. Perfect. I'll keep my trend line at that point, right? Clearly, you see that the market has been on an uptrend. Now, we are going to be looking for possibilities to buy, for possibilities to trade with the trend, right? We're going to be looking at possibilities to trade with the trend, considering the fact also that this trend line is being respected. Because I will look for sell opportunities, but only if this trend line has broken, right? If the trend line breaks, trend line breakout trading strategy, right? If the trend line consolidates, the trend line breaks, what happens? We here have an immediate entry, or we wait for a retracement back to the trend line, then we have a push to the downside. But if this trend line does not break, I am not looking for a sell opportunity, except I want to scalp, like one trade I took yesterday. Stop loss 15 pips, take profit about 45 pips. That's basically just a scalp trade. With gold, you probably will take profit within the next 5 minutes, depending on the session though, right? But now, if you have to take a high probability trade, then we want to look for a buy opportunity on this trade right now. And we have to start looking for that opportunity now on the 1 hour time frame. We have to start looking for that entry opportunity on the 1 hour time frame. Remember, on the higher time frame, we already had our confirmation. The daily candle was a bullish candle, and the trend is overall an uptrend. I'm looking at gold now. The possibilities of gold going up and the possibilities of gold going down, right? On the 1 hour time frame, let's mark our key levels. Remember, we have not marked our key levels on the 1 hour time frame. So on the 1 hour time frame, we have this key level right here. We have these key levels right here. Point of consolidations are point of interest. Point of consolidations are point of interest. So right here, we have a key level on the 1 hour time frame. We have another key level down here. We have another key level down here, right? And let's see if we have another key level below. Though I am focused now around the present market price, but let's get this key level down here marked, right? And how I think I have another one here, though we can see it better on the lower time frame after the 1 hour, but there's a key level here, right here. These points are very important. Point of interest. Points where the market has respected in the past is likely to respect in the future, right? That is pure price action without considering any fundamentals, sentimentals put into place, right? You see that these levels have respected in the past, it will respect in the future. There is no way the market is going to pass any of these key levels like it's no key level, no way. When it gets there, it must react to those key levels. So these levels where the market has reacted on in the past, it's likely to react on in the future. Those are your key points of interest. Those are your entry points. Those are the points we have to look for entries, right? So on the 1 hour time frame now, I am looking at what is happening now with the candlesticks, right? I am looking at what is happening with the candlesticks. So we are paying attention to the candlesticks now from the 1 hour, 30 minutes, and 15 minutes where I'll mostly get my entry, right? If I don't have an entry yet, I'll patiently wait for an entry. Okay. So we have marked all our key levels on the 1 hour time frame, and clearly where the price is at. Price is almost approaching this key level here on the 1 hour time frame. Price is almost approaching this resistance level, and we have a trend line right down here, right? We have a trend line right down here. So what can you already observe from this chart? What can you observe from this chart? Let's draw our trend right up here. Okay, we go down to the 30-minute. Probably I should be rushing down to the 15-minute, which is my most favorite entry point. Now, look at this chart. Look at the chart. Pay attention to the chart. You can clearly see that the market has been moving within this range. Respect this key level, which we mark on the 1 hour. Remember, we mark this level on the 1 hour. It has respected this level right down here. Break gone down, come back, we tested this level, right? We tested this level, gone down, come back up, retested this level, and what we are seeing now is this is what basically what we are seeing here right now. So we are having a situation like this where we are going to have a triangle and the market is moving. When it gets to this point, what happened? It has to break up or it breaks down, right? The market has to break up or it breaks down. Now, the question is, what is the possibility of it breaking up and the possibility of it breaking down? Now you start looking at the trend of the market. If it's on an uptrend, the possibility of breaking up is high, right? If it's on a downtrend, the possibility of breaking down is high. If we have a situation where we have the market like this on an uptrend, then we have a key level like this. So the market is bouncing and pushing to the upside. Then the possibility of breaking up is high. In a situation where we have the market on a downtrend, right? The market is going up, respecting and pushing more to the downside. Then we have the possibility of the market breaking to the downside, right? So at this point now, if you want to place a trade here, do you have an entry, right? If you want to place a trade here, do you have an entry? That's the question. That's what we are looking for. This analysis is to see that we get an entry. Now, if I want to sell go at this point, I want to put my stop loss somewhere around here, my target down here. I have an enemy very close. You get? I have an enemy very close. I have an opposing trend line very close. When you're on your support level, your enemy is your resistance level. That's why when the market gets to your resistance level, you want to close. When you are looking at the trend line, the opposing trend line is your enemy, because when the market gets to that opposing trend line, it starts rejecting. That's why your take profit should be at that point. But now, if you are placing this trade here, it's probably for a scalp trade, right? To get a high probability trade on gold now, what is the possibilities? The possibilities we have now is wait for the market to consolidate. The market is probably going to consolidate. We are 230, almost 230 now. Let me look at the volume we have on the in the market now. So I'm using golden hours. If you have the app golden hours, if you are using iPhone, golden hours. So if you go to golden hours, you're going to see that as we speak now, we have $4.9 trillion running in the market. New York session opening, right? We have another volatility that is coming in the market that is going to be more than 4.9 trillion. So we have a volatility that is still to come into the market, New York volatility, New York session volatility, that is still to come to the market, that's still to get into the market, right? Now, when that volatility get in, the possibility of the market breaking any of these levels is high. That is our target, right? So we want to wait for the market to break out of this triangle. Now, it might break to the downside. It might break to the upside, right? If it breaks to the upside now, then we are looking at the market taking out this previous high, or the market taking out this previous high, or the market taking out this previous high. Yesterday, I analyzed this chart, this particular chart with my students in class right here. We analyze this chart, we're anticipating that the market is going to break this level yesterday, but it did not break, it went back down, right? So it has clearly come back up to the same level. So we are hoping that it's going to break this level to the upside, because I am looking at potential buy opportunities on gold as we speak. I'm looking at potential buy opportunities because we are still on an uptrend, right? And the overall trend for today is bullish. We look at the daily time frame. The daily time frame was overall a bullish candle. Is that clear? So we want to look at the market breaking this key level, and the market is going to break this key level when volatility comes in, when liquidity comes in. Those are one of the advantages of the forex market, the liquidity that is in the market, right? I guess when we are going to get into about 5.5 or $6 trillion running today in the market, that level is going to break, right? Once that level breaks, we are good to go. Is that clear? So at this point now, we have no entry on gold. What we have to do on gold now is to wait for it to break this level. And I'm going to conclude that on my 15-minute time frame, where I'll patiently wait for my entry. I'm still on the 30-minute time frame. So on the 15-minute time frame now, this is where I want to wait for my entry on gold, right? Like I said, some people might come and you are selling gold at this point. You can come and you are selling gold at this point. Well, except you want to scalp, right? If you want to scalp at this point, then you can say, okay, I want to take a short-term sell to the downside, and you're going to have your life jacket somewhere up here. Your life jacket is your stop loss, your risk management, right? So, but at this point, I'm not looking to take any low probability trade. I'm looking to take high probability trade. That's why at the end of the day, you can see me maybe take 3 trades in a week at the end of the day, or 5 trades in a week. Last week, I took just 2 trades, and those 2 trades were all take profit. You get. You have taken maybe 5 or 10 trades for that week. At the end of the day, maybe you have not even seen profitability. So you have to wait, patiently wait for high probability trades before you place a trade. Are we clear? So at this point, I don't want to scalp gold right here, right? Because if you want to scalp gold here, you're looking at something like this. If you want to scalp gold here, you're looking at this key level right here. You're looking at this key level right here, right? You're looking at the market expecting to push down to take this low right here, right? But now, looking at the bigger picture, the market has to buy. Looking at the bigger picture, I am looking at the market actually breaking this trend line to continue pushing to the upside. And when it breaks this trend line, we are going to see the market going back to this previous high right up here, which is the highest high so far on gold. This is the all-time high so far on gold. So once it breaks this trend line, then we are pushing to the upside. So I'm looking at the bigger picture. Once it breaks here, I have my entry. Once it breaks here, this is how my entry is going to look like. Good. So once it breaks here, I'm going to see that I get an immediate entry, or I wait for it to break, come back and retest. I wait for it to break like this, right? Once it breaks, it's probably going to come back, retest, and it continues to the upside. Now, one thing with breakouts is that the breakouts at times are very fast. The breakouts at times are very fast. So it can break. You probably will not even see when it has break, and when it breaks, it moves with high momentum. Remember what causes the market to break? When that liquidity comes in, right? That money is pumped into the market. When that liquidity comes in, it breaks. So that liquidity causes the market to move very fast. But when it breaks and goes up, it will always come back and retest. That retest now is to confirm that that is actually a key point of interest. That is actually our key point of interest. Is that clear? So at this point now, we want to see a break of structure here. If you look at even this 15-minute candle, right, you see that, let me explain this candle right here. If you look at this candlestick right here, you see the momentum is coming in already, right? If you look at this candlestick, you are going to see that the market actually went down. Buyers were able to take this market back up, and immediately this candle closed, buyers were still able to continue this move without any sell rejection, right? Without any sell rejection. So the only barrier we have here now is this key point of interest, and it is very normal. The market has respected this level here, and it has respected this level in the past. So it cannot just come and break this level like this to go to the upside. It must react to that level. So it might even react to this level. The buyers, it might take up these buyers up here. You still react and still push back again to the downside. Consolidations now is like the market is gaining strength to break that level to the upside. Right? Consolidation is now is that the market is consolidating to push and break that level to the upside. That's why the market is consolidating at that point. Are we learning? Are we understanding? So that's why you find the market rejecting this level like this. So liquidity has to come in now to break this key level before we have that clear push to the upside. If I'm being sentimental, I could just take a buy at this point and put my stop loss down here. It will not be a high probability trade, right? Because you have to wait for that clear confirmation. And what do you need to wait for that clear confirmation? Patience. That's all it takes now for you to be patient. Patiently wait for the market to actually break through. Then we have that push to the upside. Now, why are we not looking to sell? Why am I neglecting this scalp trade here? Why am I neglecting this short sell here? I'm neglecting this short sell here because I want to look for high probability trade. That is, I want to trade with the trend, right? I want to look at, okay, today has been bullish on gold. Gold is normally on a higher time frame. I want to trade with the trend. That's why I am neglecting that sell that you are seeing there. I'm neglecting that sell because I want to trade with the trend. I want to ride with the trend. Is that clear? Are we understanding? Golden that's not the, I don't know, that the color of this golden R you send, Cardin, the color of this golden R you send is not the same with mine though. So if you pay attention to gold, today when that liquidity gets in, it might likely break to the upside. So if it breaks to the upside, we are going to be having an entry. Let me see. Okay, yeah, some time. So I have simply explained these candlesticks right here. So when you are going down to the lower time frame now, you are looking at candlesticks and looking at how the market reacts to this key level for your entry confirmation, right? How the market reacts to these key levels for your entry confirmation. So this clearly is a clear confirmation that buyers are taking control of this market. You see that? It's a clear indication that buyers are taking control of the market. Now, if I'm going to place a buy trade at that point, where will my stop loss be? Right? If I'm going to place a buy trade, where will I have my stop loss in place? Where will I have my stop loss in place? Obviously, if I have to put a stop loss, it's going to be on this previous low, which is going to be too far. So I want to wait for the market to break this level to the upside, which is already breaking. We can see that clearly. Look at our chart, right? It is already breaking that key level. Now, the market breaks that key level now. I want to have my stop loss now, not here. Now, my stop loss now can safely be at this point, right? My stop loss will safely be at this point. So you want to wait for this candlestick now to close above. Let me look at our 1 hour candlestick, right? So back to our 1 hour time frame, I want to wait for this 1 hour candlestick to close above this level. And I am good for my buy trade. with my stop loss below this zone. That's an entry we are waiting for. Those who have gone through my lesson on trade on trend lines, where if I start on the 1 hour candlestick close, we don't want to look at 5-minute or 15-minute candlestick close because the lower time frame is very volatile and not stable, right? So you want to look for this 1 hour candlestick to close above this break of structure, and we have a clear buy setup. So once it breaks above once this 1 hour candlestick close above, now we are simply coming back to place our trade. That's how you get a high probability trade, right? So just on our analysis, you can clearly see that the gold has break already on 15-minute. 15-minute candlestick is already up. Our 15-minute candle is already up there. So please, the recordings network is disturbing. Issues with network in Cameroon. Let me just take this moment to announce that we are no longer going to be having online mentorship sessions again. Reason being that network issues disturb. Some people are not stable. At that time, you are not available to attend classes. So what we have is a hybrid course for next session, which is going to start on Monday. What we are going to have is a hybrid course. That is a fully recorded course that you can download when you have network and fully consume when you are stable. And a hybrid being that it's not just going to be recordings, we are going to be having live question and answer sessions every week. So the live question and answer sessions is to answer your questions. So while going through the recordings, you might have difficulty, you might have a problem. You just make sure that you write down your problem. Then when it's time for class, you can ask your problems, ask your question, right? So those who have network issues, the recordings is going to be uploaded on YouTube. So I want to wait for a confirmation for us to actually get a sell, for us to actually get a buy on this trade. We were able to wait for this 1 hour candlestick to close. Okay, let me just check my trading view to see how many hours we left for the 1 hour candle to close. Okay, we have about 21 minutes. We have about 21 minutes left for this candlestick to close, right? So if this candlestick close on our 1 hour time frame wants to close above, then we are good to place our buy trade on gold, right? So in the next 21 minutes, if this session must have ended, the signal is going to be sent on Telegram, both the free Telegram and the VIP, so we all can actually make some profit, right? Now, those who are fast and quick, they must already place the trade. But well, placing the trade now, you are not following principles. You are not waiting for that clear confirmation before placing that trade, right? Because this break might be a fake breakout. You might be looking at it on the 1 hour time frame that it has break, but now on the 15-minute time frame, sorry, that it has break, but now it might be a fake breakout. So that 1 hour confirmation for the market to break and close above, the 1 hour candlestick to close above, is to avoid fake breakouts, right? It is to avoid fake breakouts. Now, which other pair should we look at while waiting for the entries on gold? Let me just make sure I have my gold chart on this other screen so I don't miss that entry. These days I've been having serious issues with missing entries. Okay. Okay, even the 15-minute candle has not closed, right? So you can see clearly that even the 15-minute candlestick here has not still closed. But clearly we are going to have a clear push to the upside. So you can see the candlestick confirmation right here, right? And the way this candlestick closed and the way this candlestick opened, clearly the buyers are in control than the sellers, right? So at this point now, don't bother about how the candlestick is shooting and going up, right? It's going to reject back. So once we reject back, by that time, the 1 hour candlestick must have closed definitely above there. Then we are going to have a clear buy entry or clear push to the upside. So we can confidently at this point now, we can confidently have our stop loss down here, right? We can confidently have our stop loss down here. Yeah, we can have our stop loss around here. So if the market comes back to this level, retests this level, then we have our stop loss around down here, around 35 pips stop loss. Then we are looking at pushing our first take profit on this high, on this right up here. Then you can have the next take profit up there, but probably this is to be our target, right? So when it comes back and retests, it will come back. Not even you probably. I've seen it over and over. That's why I can confidently tell you that it's going to come back and retest. When it comes back and retest, you have your entry and your stop loss is down here. That is how we do it. Pure price action. You still maintain your risk management, right? Maintaining risk management means that you have your stop loss, you use the calculator, you go to FN-FOREX Academy calculator. Let me just go to browser and just show you how to use that. So you come to your browser. On your browser, you want to look for FN-FOREX Academy, right? Search FN-FOREX Academy on your phone, wherever. Once you search that, come to tools, go to position size calculator. And on position size calculator, you do your thing, right? Which pair are you trading? You choose. If you're trading Euro USD, fine. If you're trading gold, XAU USD. XAU USD, your account currency is in USD. So it just says USD. Your account balance is in USD. Then you put your account balance. If your account balance is there, maybe $300. How much do you want to risk on your account? Maybe you want to risk 5%, maybe you want to risk 10%. You just put, right? So you can put 5%, or you can come and change it to money. So you just simply put the actual amount that you want to risk, right? You put the actual amount that you want to risk, maybe $10 or any amount, right? So you put. So if we are going to risk 5% of our account, we will be risking maybe around $15, right? If in percentage, then you just put how many percent you want to risk, maybe 5%. Then you come, you put your stop loss. Our stop loss is going to be around 35 to 40 pips. You put your stop loss. Or if you don't want to put your stop loss, you can put price. So if you are not putting your stop loss, you put price. With this calculator, it helps you open price. This is the present market price. If you go back to gold, if I share my screen, let me just share my full screen. If I'm sharing my full screen now, right? If you look at the price we have here, you go back to gold, right? You go back to gold, you're going to see the price. It might consolidate a little bit. 30.27, right? 30.27 point something. You come back here, you're going to see 30.29. So it fluctuates. So it resets. So it's 30.29 now. If I refresh the website, probably you don't even need to reset the website. It resets itself after like 10 to 15 seconds. After like 10 to 15 seconds, XAU USD, right? XAU USD. change to price. 30.27. You come to the chart now, you see we have 30.27. That's around the price which we are on now, right? So you see that we have 30.27. So the price on the calculator resets itself. So now what you simply have to do now is to put the price for your stop loss. So if the price for your stop loss is, let's say if we are going to put our stop loss here, as you come back and retest here, we are going to have an entry to buy to the upside. We are going to put our stop loss 30.21.7.8, 30.21.8. You just simply come to your calculator, you are putting your price 30.21.8. So once you put your stop loss price, that is if I give you the signal, I'll say, okay, buy gold, put stop loss at this point. If I don't give you the number of pips, so you will probably not know the pips, number of pips you should be using, right? But I'll give you the price for the stop loss. You just have to come and put your stop loss here. Once you put your stop loss here, then you are good to get the actual loss size you should use. So once you put your stop loss, and another thing you have to note, for gold and for metals, the P value here is always going to be 0.01. Remember, the P values will vary depending on the currency you're trading, the currency pair you're trading. Most of the normal currency pairs are lot size 1, just 1, right? But for gold, it is 0.01. So you have your lot size there to use. So if you're using the lot size 0.03, so 0.033, you know that this is how much you are risking, right? You know that you're risking $20 on your account. This procedure might look as if it is long, but once you get familiar with it, all you have to do is just to come. Maybe if you are trading gold already, so gold already be there. All you have to do is just to come here and you just simply put how much you want to risk and you put the stop loss price. The entry price is automatic. It adjusts the open price of that particular currency pair itself. That's one thing that is unique about this particular calculator. Other calculators will not give you updated price of a particular commodity, and they will not give you this option to actually put the price of your stop loss and not the PIP. So once you calculate, you come back to your trade and you are good to have your entry. Have we had that our retest? Okay, let's hope this market come down here again, because this 5-minute candle that will come down here, we are just hoping that's not the retest as fast. But the market will definitely come and settle down here, right? It will definitely come and settle down here. Let me see where we are at now. Hold on us. Okay, there's still liquidity that has to come to the market. We are still on $4.9 trillion. $4.9 trillion. So it's going to come down to retest. When it comes down to retest, we are going to have an entry. Let me just open the chart on this other laptop so that I don't miss out. So that we don't miss out that entry. Remember, we have done our analysis and we are looking at getting our entry. Does that mean that we are not going to apply our proper risk management? Nope, right? We are still going to apply our proper risk management. We'll still apply our proper risk management. Okay. Nice. Patience, 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 patience. I know some of you are already very hot to place a trade. Patience is going to come back and respect that level very well to actually confirm that I have breaking out of that level. And if I am coming back down, I cannot break that level and go back down again. So what we are expecting is for the market to come and react to this level like this. So you have to be very patient. You are waiting for the market to come back and react to this level. Then we have that push to the upside. But now if you heavily place this trade here, it will take you to draw down. If you heavily place this trade here, you see that your stop loss is going to be very far, right? And those are some of the mistakes you make. When you play this kind of trade now, the market comes down, reject now, it takes you into losses before probably going up. And your stop loss, what you'll be risking will be too much. Or let's say you're maintaining what you're risking, but your risk to reward ratio will not be the best. So I'm watching gold on the other screen right there. When we get an entry, we are going to come back to it. Let's look at GBPUSD. Let's look at GBPUSD. GBPUSD, GBPUSD. I'm just looking at GBPUSD on the 15-minute. I'm also seeing the possibilities of continuation of an uptrend. But now let's do our analysis properly. I think I've already marked this chart already. But if you look at GBPUSD, you see that we have on our daily time frame, our candlestick on our daily time frame is a bullish candle, right? Our candle, the daily time frame is a bullish candle. You see, I already have my key levels marked the same way I marked them on the gold, right? So I already have the key levels marked on the daily time frame. I already have my key levels marked on the 4 hours time frame. I already have my key levels marked on the 1 hour time frame. And now, when I'm getting to the 1 hour time frame, still again, the same procedure, I want to look at the possibilities. What are the entries I might have? What are the entries I might have, right? What are the entries I might have on GBP USD? So looking at GBP USD, let me see back to the 1 hour time frame. We are on an uptrend, daily candlestick bullish. Okay, back to the daily time frame, back to the 1 hour time frame. On the 1 hour time frame, what is the market struggling to do? Why is the market consolidating on this point? Why is the market consolidating on this point, right? I want to see every point of consolidation is a point of interest. So let me put my horizontal line and see where that level leads us to. So putting my horizontal line at this point, you see that this level leads us back to a key point of interest. The market rejected this level and went down here. It consolidated here, went up, rejected around this zone, went up, rejected here, went up, consolidated to the downside, a whole bunch of consolidation. And these consolidation points are key points of interest. So at this point, we all have this similar thing with GBP USD. GBP USD is on an uptrend, but it is on a key level. So we are looking to see that the market actually breaks this key level to the upside, right? We are looking to see that the market actually breaks this key level to the upside. Then we can have a continuous trend to the upside. And if I want to put my trend line, you can see that my analysis are based off. Why is this computer the world? Don't go off. If you look at GBP USD very well, right? You're going to see that on this level, we have a trend line. And the market is around that trend line. So what we have to do for GBP USD is still to wait for the market to break. Wait for the market to break, right? Once you break this level, maybe you come back, retest this zone, which is rejecting on now. This rejection does not mean that it's going to go down. If it wants to go down, it'll probably just be a scalp. The same like I said for gold. So imagine that those who actually took that scalp trade you were seeing on that gold, if you took that scalp trade now, you must have already hit your stop loss, right? So you wait for higher probabilities. My other screen right here has gone off. So let me just do with this. Let's switch back to gold. So right here, what we have for GBPUSD is potentially wait for it to break this key level, which is rejecting on, and this trend line we have here. Then we are going to have a push to the upside or a retest and a continuation to the upside. So now let's go back to gold. I want us to go back to gold. I want us to go back to gold and wait for our entry on gold. Let me see how many minutes we have left for that 1 hour candlestick to close. Okay, we have like 3 minutes left for that 1 hour candlestick to close. 3 minutes left. We have like 3 minutes left for this 1 hour candlestick to close. So you probably close above, right? So you can have your entry on gold like this. We can have our entry on gold like this. Let's just trading view now. So on 15-minute time frame, you can have your entry on gold like this. You can have your entry right there, right? So you can place your entry on gold like this. Let me look at our target. So we are targeting this high right here. Let me just mark that point. We are targeting that high, right? We are targeting that high right there for our first take profit. And this next high for our second take profit, right? So if you're placing this trade here, when the market gets to this point here, you can close. If you're opening two position, like me, I'm opening two position. I'm opening two position. When the market gets to this first high here, I'm closing my first position and I allow the other one to run, right? Or if you're opening one position, when the market gets to this level, right? If you're opening one position, you can take partial or you move your stop loss and put at your entry. So you can place your trade for gold at this point and place your stop loss. Let me send the trade to the group now. So once this is done, you set and forget, and you go about doing other things, right? You set and forget. If you have other things doing, you go about doing other things. And that's how you simply analyze your chart and be patient and wait for your entry. The 1 hour candlestick is going to close. I think it has already closed already above. In 1 minute, the 1 hour candlestick will probably close above, so we can have our entry. So I'm simply placing a trade now. If you have not joined the Telegram, the free Telegram, I think most of you are in the free Telegram. If you have not joined the free Telegram, just click the link below this video. For those who are going to be watching on YouTube, click the link below this video to join the free Telegram, where the link for the session is going to be sent, and the free signal, which I'm about to send now. So first of all, send to the VIP. Okay, then follow us out here. 30. Okay, 1 hour candlestick has closed above, and we are going to see another real retest. So once it retests that level, it's going to probably push to the upside, clearly as our strategy shows. So if the trade end up not going our direction, we have followed our principles. We have patiently waited for our entry, and now we are placing our trade. So we are placing our trade now. Perfect. So trade has been placed. If you see my trade, here, you already see that I'm already in profit of about $200. Your lot size might be small, right? So I'm already on 800. I'm on 900. I'm on 900 already. Your lot size might be small. You might be running slow, or some of you are still thinking. You are still scared of placing your trade. We are already running in profit. We are already running in profit. We are in profit already. If you are not in profit, then I don't know, probably you were still taking time to think and reason. Let me see those who are in profit. Those who are in profit, drop fire if you're in profit. Drop fire on the chat section if you're in profit. Oh, drop some fire. Drop some fire. I am on 1,800 live. 1,800. 1,800 live. I am on 1,800 already. We took the trade together, right? I believe you all are making profit. Pure price action. Patiently wait for your entries. You get your entries. So, I mean, that's it for the day. We have looked at gold. We have looked at GBPUSD. I am on 2,300. Come and see. 2,300, right? That's somebody on 2,300. While I'm still on 1,900. Perfect. Let's go, guys. So basically, that is how I do the analysis. That is how you should do it. It's as simple as that, right? Keep it simple, keeping it real. The recordings is going to be on YouTube. I am on $49. Perfect. The recordings is going to be on YouTube. Anybody, you can go over and watch the analysis again, right? Okay, so are we all good? Are we all good? Are we all good? Are we all good? Live chart breakdown. Oh, we are all good. Okay, so see you guys next Tuesday again. See you guys next Tuesday again. We are going to do the chart breakdown every Tuesday, 1:30 p.m. You can enjoy your profits. You can take partials. It's already on the level where I said we can take partials. So if you open two positions, you can take your first position now. You can take your first take profit now, or you move your stop loss to your entry and you keep going.